Hello, I'm John Janarone, Editor-in-Chief of IPO Edge. Thrilled to be back here at the New York Stock Exchange for the F-Suite event. I have with me Steve Parish, who's the co-head of ICR Capital. We're going to talk about this thawing IPO market, right, Steve? Let's get into it.
Hi, John. Pleasure to see you.
Now, Steve, we've had this discussion, I would say, a lot over the last couple of years. Tell us, what is the state of the market? What needs to change? Are macro issues, the election holding things up? What's going on?
John, right now, the IPO market, while we see some green shoots, it still seems like it's going to be a 2025 and 2026 event where momentum will really rise as we get into the early part of next year.
So does that mean that with interest rates and the election all up in the air, people are just a little bit scared to run out right now, or could we have a few in the fall?
I think we will see some activity in the fall. There are right now actually about 120 companies that are publicly filed. So those are all potential issuers in the fall. Based on our connectivity with the market, our expectation is that we'll have a fall somewhere in the 20 to 25 IPOs.
Now, are these bigger or smaller ones you think will get through in the fall?
In the near term, the focus and the preference from the investors will be for larger cap companies and larger, more liquid IPOs. There was very little IPO activity in the last few months, but those IPOs that did occur were on the historically larger side.
Gotcha.
There was a multi-billion-dollar IPO from Lineage Logistics, which was very well received, which is an example of the preference for larger size, on average, IPOs than has historically been the case.
Now, Steve, as an investment banker, when you talk to your clients about the election, I'm curious about that. The debate was very fun to watch. How much does that matter? I mean, will the regulatory impact on, say, the way the SEC works, et cetera, change under Harris or Trump?
I think the election is just one of the factors that impacts the IPO market. What's really causing the lack of activity is sort of a confluence of events. Certainly the uncertainty of the election is a factor. The state of the economy, are we going to have a soft landing? Are we going to have a recession? Especially with the recent economic data, and the market has been more volatile over the past few weeks than it's been in the past. The timing on interest rate cuts. So there's a number of dynamics that are causing a bit of a pause in the IPO market. The election itself, we found historically, has not been an obstacle for IPO issuance in it of itself, but I think these other factors, and I should also add, geopolitical uncertainty is also something that weighs somewhat on investors and attributes to the increased volatility in the market. The recent volatility over the past few weeks, the biggest enemy of the IPO market is volatility.
Gotcha.
Yeah.
Now, you were talking about the election not really impacting the total flow, but during those 2 weeks around the election, probably quiet,
yeah,
right?
The 2 weeks, immediately before and post-election is certainly a quiet period. Part of also what impacts the timing of IPOs is structural. It's the windows for IPO issuance where companies issue relative to their quarterly earnings, and because the quarter obviously ends September 30th, and investors, if you do an IPO post September 30th, investors are going to want to know the results of Q3, and those are not immediately available, and creates another dynamic where companies have to wait for the Q3 earnings to be able to educate investors, and that happens to coincide almost exactly with the dynamic you talked about, the 1 week prior and 1 week post election. So that's another factor.
Gotcha. Steve, I'd like to formally invite you, speaking of November, to our conference, which is November 13th and 14th down in Palm Beach, so we can talk about that more in detail then. if you can come.
Yeah,
I know I'd like this Manhattan night to get some Florida weather.
That'll be perfect timing, because we'll have by then hopefully an interest rate cut, as certainty on the election, Q3 results. We'll get a better handle on how the economy's doing through companies' Q3 earnings. So I think there'll be a sort of a clearer path for how those issues will affect the IPO issuance going forward. So I think ideal timing. As always, John, you tend to be a great timer of the market.
Well, that reminds me, Craig DeDomenico over at Stifel just did a $200 million SPAC deal about a week ago. Is that an indication of more of those to come? Will there be some? Maybe not too much, but
that's great.
a bit.
Contrary to what may be the public perception, SPACs are not dead. We see SPACs reverting to a more normalized level of issuance, and there's certainly a place for SPACs in the equity capital markets landscape, and there are experienced SPAC sponsors who have a lot of expertise in really adding value to potential SPAC targets, and there are companies that are better suited to go public via the SPAC route than traditional IPO. So while we don't think we'll have any, we clearly had a very unusual and one might say unhealthy spike a few years ago in SPAC issuance. We see a normalized level of SPAC activity, and certainly there is a place for SPACs in equity issuance.
And as you said, these so-called serial issuers, people who have done it many times successfully, not Ashton Kutcher, but someone like Nick Petruska with that deal for the Stifel, right? You're not going to have the celebrity SPACs, you don't think?
I think A-Rod has focused on other things.
That's great. So, all right. So, we've been talking about this once again for a couple of years. What are guys doing to prepare? And have companies given up, or do most of them keep their filings updated? How does that look?
That's a really good question. And one of the big changes in the IPO market that has occurred over the past few years, and has been exacerbated by a bit of a slowdown in IPO issuance, that companies are much better prepared to be public companies than maybe they were, in the past a few years ago. Companies are spending a lot of time meeting with investors, meeting with research analysts, honing their company presentation, doing all the internal readiness on a SOX basis, and working with the auditors. We are seeing a drastic change in the preparedness of companies to go public, and they're very active. And at ICR, we spend a lot of time helping companies hone their story, meet investors, and work on their financial model, and start doing things like mock earnings. So when you go public, all of a sudden we have to do our first earnings call. What do we do? Well, practice is this is an ideal time for practice, and companies are doing much more of it than they've done in the past. So this is a very productive time, and we think the performance of IPO companies, I'm not talking about the stock performance per se, but the performance relative of companies relative to their guidance and their financial model, we think will be enhanced because of this greater level of getting ready to be public.
So, Steve, I was going to ask you about 2025, but we've kind of already gotten through that. I'm going to make it harder for you. So, since the 90s, the number of publicly traded companies has dwindled. Is that ever going to change, or are there structural forces behind that? So let's say, give me your 5-year prediction. Are we going to see a ramp back up? I mean, it would be good for you.
To your point, John, it's staggering. And there's people use different metrics, but we like to think over the last roughly 25 years, the number of public companies listed on New York Stock Exchange and NASDAQ has gone from something like 7,500 to 3,000, a drastic reduction. And our belief is that while the cost of being public is greater, there there will be a cycle where there will be a much greater number of public companies, and the U.S. capital markets are the best, capital markets in the world, and the best way for growth companies to grow. On the, another factor is the rise of ownership by private equity firms.
Yeah.
Where over that same period, some numbers we use, there were about 1,500 companies that were owned by private equity and venture capital firms. Now we think it's somewhere in the 13,000
wow.
Range. So it's up a significant amount, and those companies are owned by funds that are not permanent owners. And we think many of those companies will end up in the public markets at some point. They may end up at another private equity firm first, but ultimately we think a good number of those companies will become public companies. So your question, there are some challenges to being public with on a cost and regulatory basis. But ultimately we see the cycle coming back and an increase in publicly traded companies.
I was going to leave it there, but you made me think of something else. So when we're looking at these private equity owners, normally that cycle is 10 years, right? But when you have a quiet IPO market, what happens if the Apollos, KKRs have a company in their portfolio for a decade and there's no easy way out? Like, what are they doing? Can they extend it?
Well, what some of the private equity firms have done is created continuation funds where they've moved their position into a new fund that allows them to extend the holding period. But I think a topic at all private equity, among all private equity firms and private equity LPs, is returning capital. Private equity firms want to raise new funds and deploy new capital. Their investors expecting a return of capital.
Gotcha.
So and they have three exit opportunities: going public, selling their company to a strategic, or selling it to another private equity firm. And we think it's been underweighted on taking their company public, but that we think over the next period of time that will gravitate towards more companies seeking the public markets.
Well, let's hope so, Steve. That'll be good for us, give us more to talk about, see more of them down here at the New York Stock Exchange.
Absolutely.
This is Steve Parish, who is the co-head of ICR Capital. Very happy to be here with him. I'm John Jannerin of IPO Edge, signing off.